Good afternoon. The task force will now come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, members of the full committee task force, members not on this task force, are authorized to participate in today's hearing, consistent with the committee's practice. This hearing is entitled "The Future of Real-Time Payments," and I now recognize myself for an opening statement. Thank you for being here. I want to thank our esteemed panel of witnesses as we discuss the future of real-time payments in America. Today we'll examine how the nearly instantaneous clearing and settlement of payments stands to benefit consumers and small businesses, as well as the challenges it presents to both operations and security. This is a timely conversation. Both consumers and institutions' expectations have demanded innovation. And in fact, just a few days after we announced this hearing, the Federal Reserve announced their intent to roll out a 24-hour, 7-day-a-week, 365-day-a-year wholesale real-time payment system called FedNow. Much of the wider discussion surrounding fintech is focused on consumer-facing applications like digital banking or applying for a loan on your smartphone. Along with these other applications, payments technology has seen a similar evolution. Every day, consumers use apps on their phone to split the check at restaurants or the utility bill at their apartment. But unlike other fintech applications, payment technology is still largely dependent on old infrastructure that only allows settlement to occur intermittently. For example, if you make a transaction or transfer money on a weekend, it might take up to 3 days for your account to reflect that transaction. Americans have come to expect that they can make a payment with the tap of a button, and now our financial system is racing to catch up. For families living paycheck to paycheck, real-time payments mean payday actually means payday, without having to resort to payday loans or other predatory alternatives while waiting for a check to clear. For gig workers, it means the options to get paid immediately after a job, something that can be the difference between paying a couple of dollars for a cup of coffee or paying $35 for a cup of coffee and an overdraft fee. For small businesses, it means having instant access to the money customers pay, reducing the need for short-term borrowing to pay employees or finance the purchase of goods. This will allow our businesses to cut down on the cost of borrowing capital and spend that money on growing their businesses. There are a wide array of benefits to be gained from moving to a real-time payment system, but it's not without some risk. Faster payments can mean a faster way for scammers to rip off unsuspecting victims, and the additional data used to track a real-time payment can serve as an inviting target for cyber criminals. We're faced with the meeting of two cultures, the rules-based cultures of banking and the move fast and break things culture of tech, which sometimes burns through and fester cash early on, and that is a philosophy that does not work well in banking. Today's panel has a wide array of expertise from government, financial institutions, and financial technology firms. I am looking forward to hearing the testimony of our witnesses on the benefits and the risks of real-time payments, the hurdles that we still face on our way to universal adoption, and what lessons we can learn from other countries. With that, I'd like to recognize my friend and colleague, the gentleman from Arkansas and ranking member, Mr. Hill of Arkansas, for an opening statement of 5 minutes.
Thank you, Mr. Chairman. Thank you for having another good hearing in our FinTech Task Force to talk about another critical element in our research on how best to propose policy changes, both regulatorily and legislatively, to enhance innovation in the United States, to make sure the United States remains a global leader in FinTech, both on the credit side, the payment side, the depository side, both among incumbent financial institutions as well as in non-bank innovators. So it's going to be good to have this conversation about the payments arena because it's completely evolving and transforming as new technology, as you've noted, is brought on board. And throughout my almost over 40 years in finance, I've certainly seen every innovation that's happened since the mid-1970s, whether you're talking about checks or debit cards or credit cards, wires, or now paying through Apple Pay or from your watch. And that payment space has been a big, important part of my personal career. I was a founder of the Southwest's largest shared ATM ETF network, Pulse, back in 1980, now owned by Discover. And at the time, that was the cutting-edge technology for retail banking. And it was interesting to see that. And then when I was a community banker in Little Rock before coming to Congress, when Google AdWords first was created, we built an entire digital bank online through Google AdWords, specializing in health savings accounts. So I've sort of seen this emerging technology as an incumbent player. But during the first half of 2019, we've seen the extraordinary change globally in this with the venture capital business looking at payments, and then some of the biggest transactions in the world stage are in payments. First, Fiserv's acquisition of First Data, Global Payments acquiring TSYS, and then those were $20 billion transactions, and then finally, recently, just a few months ago, Fidelity's agreement to merge with WorldPay at $43 billion. So payments is a hot topic. And real-time payments is a gateway for further fintech innovation. We don't have the future of digital banking without real-time payments, just like we don't have any of that if we don't have real private authentication and have a real national privacy standard and real individual identification. Those are the building blocks, the foundational blocks, whether you're doing a credit product, a payment, or opening up a new way to do banking. So we have rudimentary innovation there, Visa Direct, MasterCard, Send. These are real-time payments, sort of, right? So we have experiments there. If you have a person in college, you know all about Venmo, PayPal's Venmo. I thought for a while this was the best friend of my daughter in college because Venmo kept getting money every week, and I've figured out, no, of course not. But these are payments working around the existing system, which is why we need real-time payments that's broader, more innovative, with a bigger reach. And so I look forward to talking today about the payment space that we have. Look forward to talking to our friends at the Federal Reserve about their operations in this space, learning more about what's being proposed by the Clearinghouse to offer their real-time payments network, and also the timing of all that, because that's important. Because America has a long history of being a leader and an innovator in this space, and we don't want to retard that. And as I say, if you want a future that's digital, that's blockchain digital, then privacy, personal identification, and this issue of real-time payments that's got fraud protections in it are essential. So I look forward to the conversation today, and I'd like to yield some time to my good friend, the ranking member of the committee, Mr. McHenry.
Well, thank you, Mr. Hill, for your leadership on this, and I appreciate the testimony today. While we spent the last few years, quote unquote, updating from swipe to pen, which is not a newer technology, it's an older one, China created an entire new world of payments that connects consumers directly with their banks and merchants, where payments can be made at a click of a button. So it's happening in real time there. It's happening in a very different scale there than here in the United States. And I don't know how we get it there in the United States. I don't know how we choose to get there. But what I do know is we have to get there. And if we don't build our real-time payments here in the United States, rest assured, China will. So let's get on with it, and let's be aggressive, and let's be bipartisan. Let's get this thing done. Yield back.
Yield back.
Today we welcome a panel of esteemed witnesses. Honorable Esther George, President and Chief Executive Officer at the Federal Reserve Bank of Kansas City. President George also chairs the Financial Services Policy Committee, which oversees payment services in the U.S. Thank you for being here, President George. We also have with us Mr. Harsh Sinha, the Chief Technology Officer at TransferWise, one of Europe's largest fintech companies, which focuses on helping customers cheaply transfer money internationally. Mr. Bob Steen, Chairman and CEO of Bridge Community Bank in Iowa. He serves as a member of the Iowa Bankers Association, Payments Council, and on the Independent Community Bankers Association Technology and Payments Committee. Mr. Rodney Williams, co-founder and chief commercial officer of Lisner, a company that has developed technology to use inaudible tones to transmit payment data between retailers and mobile devices. And finally, we have Ms. Carol Benson, founding partner at the consulting firm Glenbrook, Ms. Benson has significant experience in the payments field, having also worked at Visa and co-authored the book Payment Systems in the U.S. Thank you all for being here. Our witnesses are reminded that your oral testimony will be limited to 5 minutes. Without objection, your written statement will be made part of the record. President George, you are now recognized for 5 minutes for an open meeting statement.
Thank you. Ranking Member McHenry, Chairman Lynch, Ranking Member Hill, and members of the task force, thank you for this opportunity. Chair Powell asked me to speak to you today in my role as the Federal Reserve Bank leader responsible for our payments improvement initiative since its beginning, and as chair of the Financial Services Policy Committee, which oversees the provision of payment services to depository institutions and the United States Treasury by the 12 Federal Reserve banks. I'm pleased to offer my statement for the record, as well as an in-depth statement on the role of the Federal Reserve in the payment system and the recently announced proposal to support faster payments through the development of a new service called the FedNow service. Since our founding more than a century ago, the Federal Reserve provided payment and settlement services as part of its core function of promoting an accessible, safe, and efficient payment system. Today, the Federal Reserve is continuing this important operational role and preparing to support the modernization of our nation's payment system with capabilities that allow payments to move quickly through a safe and efficient foundation on top of which innovation and competition can flourish. This decision was made only after 3 criteria were met. The first of these criteria is that other providers alone cannot be expected to provide the service with reasonable effectiveness, scope, and equity. Of notable importance related to this criterion is the Federal Reserve's ability to connect to more than 10,000 financial institutions. Through these connections, our existing payment services allow banks of every size to serve the needs of thousands of communities across the United States with competitive, fair, and transparent access. Providing the comprehensive nationwide reach is something that we believe will present significant challenges to other providers in the current market landscape. Coming from a region of the country with many small community banks serving rural areas of the central United States, I can tell you the board's decision to provide this new service has been very well received. The second criterion is that there will be a clear public benefit, including promoting the integrity of the payment system and reducing payment system risk. The Federal Reserve must continue to play an important role in promoting the safety of the U.S. payment system by providing liquidity and operational continuity in response to financial turmoil, terrorist attacks, natural disasters, and other crises. The FedNow service will allow the Federal Reserve to retain its ability to provide stability and support to the banking system, as well as promote the development and implementation of industry-wide fraud mitigation standards. Development of the service will also enhance safety of the U.S. payment system by promoting resiliency through redundancy. The third and final criteria is that the Fed be able to fully recover its cost over the long run. The U.S. payments infrastructure today includes alternative payment choices and providers. The Federal Reserve and the Clearinghouse currently operate competing and interoperable services, which bring important benefits for resiliency and for competition. In all of our services, we have been able to meet the requirements of the Monetary Control Act for cost recovery that ensures competitive fairness while fulfilling our public policy goals. We fully expect this will be the case with the FedNow service. As was explained in a 2016 GAO study, the Federal Reserve's role as an operator has long been judged as effective in promoting accessibility, safety, and efficiency for the nation's payment system and its customers. Last summer, the U.S. Treasury recommended that the Federal Reserve move quickly to facilitate a faster real-time payments. We are in the process now of engaging with stakeholders for their input on features of the FedNow service through a Federal Register notice which was issued last month. I'm confident that together we can achieve our public policy objectives for broadly accessible, safe, and efficient, faster payments. Thank you, and I'll be happy to respond to your questions.
Thank you. Mr. Sinha, you're now recognized for 5 minutes.
Chairman Lynch, Ranking Member Hill, and members of the task force, thank you for the invitation to testify today. My name is Harsh Sinha, and I'm the Chief Technology Officer at TransferWise, a global technology company with the mission to build the best way to move money around the world. I have spent the last 4 years scaling the technology and product teams in TransferWise. Before that, I was working in Silicon Valley for more than a decade, leading and developing e-commerce and payment products for companies like PayPal and eBay. TransferWise was founded in 2011 and now has more than 6 million customers moving $5 billion every month. It is one of the fastest growing financial technology startups in the world and offers international money transfer service, a multi-currency stored value product, and that can be linked to a debit card and an application programming interface that can be integrated directly into large enterprises and banks. Our company is attempting to solve the problem of cross-border payments. It's really hard to move money between different currencies and countries. The correspondent banking infrastructure is expensive, slow, inconvenient, and lacks transparency. That's why we've created our own cross-border payments network that serves 71 countries, including the US. The technology that powers our product relies on technical and regulatory understanding of local payment systems around the world. We connect directly to local payment systems, as in the UK, where we became the first non-bank to gain direct access to the faster payment scheme. We strongly agree that the Federal Reserve should create a real-time payment system. Specifically, it should be a real-time gross settlement system based on ISO 20022 standards, and the Federal Reserve should extend Fedwire hours to enable 24/7, 365 settlement. Here are 4 main reasons I believe the Fed should build the system. Ubiquity and reach. The Federal Reserve already connects to over 10,000 financial institutions in the United States. Second, pricing. Fed now should have a lower cost structure longer term, given the price recovery approach taken by the Fed. Third, competition. Having multiple systems promotes market competition. And fourth, longer term strategy. Real-time payment systems are here to stay. It would be prudent to not have a single system run by a single provider. Hence, there is a clear public interest in the Federal Reserve building a fair and ubiquitous system accessible to every financial institution and payments provider that operates at low margins over time. But as we talk about real-time payments, it's important to cover the rules that govern its access. In the US, to access the domestic payments infrastructure, a non-bank financial institution must partner with a bank to settle payment transactions. It results in added costs and complexity and partner dependence. In order to facilitate competition and ensure the benefits of faster payments are passed on to the consumers, the US should prioritize the accessibility and inclusion of non-banks in the faster payment system. Additionally, diversification will reduce systemic risks that arise from a handful of banks hosting all indirect non-bank participants. Finally, as we talk about payments, we should not only think about domestic payments, but global payments. To make cross-border payments cheaper and faster for all Americans, we need to address 2 main areas. Number 1, transparency in fees. Every year, people and small businesses transfer $10 trillion internationally and lose $200 billion in bank fees, mostly hidden in inflated exchange rates. The average global remittance cost is 7%, and the World Bank says the lack of transparency is the major reason for the high fees. Governments around the world are working to make sure customers see what they are really charged, and we believe the US should do too, as the largest originator of cross-border payments worldwide. Second, implementing to international standards. With the US lagging behind other major markets on faster payments, we can use this timing to our advantage and learn from other countries. The US has the opportunity to leapfrog from having limited real-time payments domestically to having all payments, including international, being instant. In conclusion, I believe there should be more than one real-time payment system in the United States, and the Fed is best positioned to deliver this and unlock the benefits for consumers, businesses, and the economy at large. Thank you for the opportunity to testify today. I'm happy to take any questions.
Thank you. Mr. Steen, you're now recognized for 5 minutes.
Chairman Lynch, Ranking Member Hill, Ranking Member McHenry, and members of the task force, I'm Bob Steen, Chairman and CEO of Bridge Community Bank in Mount Vernon, Iowa. I testify today on behalf of the Independent Community Bankers of America, where I've played an active role over the years, including service on the Payments Committee. Thank you for the opportunity to testify today. I believe it is imperative that the U.S. develop a robust real-time payment system to meet consumer and business demand and stay competitive with the rest of the world. This system must create access for customers of all financial institutions, regardless of size, in every American community. How we achieve the goal is critical. A real-time payment system is too important to be entrusted to a private monopoly. The 24 largest banks simply cannot own and operate the U.S. payment system. ICBA strongly supports the Federal Reserve's decision to build FedNow, a real-time payment system that will give direct access to all financial institutions and our customers. Bridge Community Bank is a $96 million community bank founded in 1903 and owned by our 20 employees. We serve real communities and growth markets in and around Cedar Rapids and Iowa City with small business, agriculture, and consumer banking. Our business model is relationship banking, in which we serve the totality of a family's business and personal banking needs, both deposits and lending. The transaction account is the key to the customer relationship and is at the heart of community banking. We have long recognized that payment innovation is critical to the long-term prosperity and independence of our bank and our community banking. This is why I have invested so much of my career in payment innovation and have developed multiple payments in our small bank. Only the Fed can guarantee competition and choice. The U.S. does not need another closed-loop payment system in which some financial institutions can participate and others are excluded. All financial institutions and all customers must have access to real-time payments, and even those that live in small or rural communities exclusively served by community banks. I firmly believe this simply cannot happen without the Fed's role in real-time settlement. The Fed is uniquely positioned to provide access to all 11,000 financial institutions because all of those institutions have access to a settlement account and a service connection with the Fed. The Fed already operates a universally accessible check, ACH, and wire transfer service. If history is any guide, the Fed will maintain an affordable as well as universal access to faster payments. The Fed offers a fair and affordable pricing structure today, even to the smallest of the small financial institutions like our bank. The Fed is trusted among community banks. Each community bank has a relationship manager and the opportunity for direct access to the payment system. I know our representative's name, I know his cell number, and he answers the phone. As a community bank, I know that I have direct and easy access to Fed support services even after our banking hours. I place a high value on that access. As I stated at the outset, payments innovation, offering customers what they want when they want it, is critical to the prosperity and continued independence of community banks. As a neutral, real-time settlement network, FedNow will be critical to our ability to continue to innovate. For example, my bank, in partnership with another community bank, developed a mobile app we call XCheck, which allows a user to send money to anyone in the U.S. that has an account at any financial institution without a payment application on the receiver's end. Once FedNow is fully operational, XCheck will allow real-time transactions without being dependent on our core system. That by itself is transformational. Once ubiquity is achieved through FedNow, new use cases and new opportunities for innovation will emerge. The Fed's entry into real-time payments is part of a natural evolution from its involvement in check clearing, ACH payments, and wire transfers. The Fed has strengthened the payment system by providing safety, integrity, choice, and equitable access to all financial institutions. I'm confident the Fed will bring the same critical benefits to real-time payments. Thank you again for convening this hearing. I'll try to answer any questions.
Thank you, Mr. Steen. Mr. Williams, you're now recognized for 5 minutes.
Ranking Member Hill, members of the task force, thank you for the opportunity to testify today. My name is Rodney Williams. I'm the co-founder and chief commercial officer at Listener, an ultrasonic proximity company that enables a universal and secure proximity mobile payment method. I'm pleased to participate in this panel hearing alongside my esteemed colleagues. As a financial technology founder, I spent the past 7 years creating technology around the inefficiencies of how we pay and how we access funds for individuals in discretionary need. Both innovations were driven by the limitations of our current payment infrastructure and my experience growing up disenfranchised. Listener was founded in 2012 with a simple idea, a way to transmit data between two devices using software and the mobile device's speaker and microphone. Since then, Listener has advanced the security and flexibility of our transmission method to support proximity-based payments and checkout experiences. Today, Listener is actively working with the world's leading merchants and card networks on what will become a better way to pay. Listener's premise and payments has always been straightforward. Anyone with a mobile phone should be able to pay in proximity, securely and universally. Today, secure mobile payments in store are driven by card networks and mobile device manufacturers' use of near-field communication. This control limits the use of NFC only to mobile device manufacturer services, as all third-party mobile applications are restricted from using NFC for payment services. This significantly restricts what is considered a safe and secure way to pay, as it's limited to the mobile device manufacturer's branded application. This has driven many of our top retailers towards QR codes and barcodes as a method to pay in their mobile applications, incurring additional transaction costs and risks which ultimately hurt the value that these merchants can give to the end consumer. Our company is addressing this core problem as Listener allows a universal and secure way to pay for any mobile device or merchant at a better cost structure than today's alternatives. We provide software that is inserted into a mobile application. Within these applications, we enable the speaker and microphone as a method to wirelessly send and receive proximity, non-cloud-based data. Merchants can leverage this method to transmit any series of proximity-based and verification data points to initiate and complete a transaction. A transaction can happen safely within a few inches or even up to 10 feet, powering more payment and checkout experiences than ever before. Today's consumers expect to pay wherever they are instantly. These experiences are expected to happen on every device in every retail environment. We see a world where ultrasonic proximity verification will live across all payment scenarios globally. As we think about the future real-time payment system, it must democratize the proximity payment method at the edge of the mobile device securely, so that anyone with a phone can pay with whatever source their mobile wallet holds. Our technology relies heavily on financial regulatory infrastructure, an infrastructure that is due for innovation in real-time payments. We strongly agree that all payments should be instant and universal at proximity. I grew up in Baltimore, Maryland, as an offspring of hardworking Jamaican parents. I personally experienced challenges of being underbanked and costs associated with being poor, as cash is expensive. As a kid, I can remember counting down to my parents' payday as the electricity could be turned off. In this simple scenario, we were being taken advantage of as the fees, delays in funds availability, and the manual tasks associated with checking or cash checking became significant. My childhood was filled with many such memories as my parents tried to ensure proper cash flow to run the household. Walking to the ATM or money transfer services, paying bills in cash, taking predatory cash advances were far too normal experiences. Looking back, even where I grew up, I believe that there was a genuine desire for advancements to play by the rules, except the rules were not written for them. This situation highlights the silent cost of payments and its unfair transfer to the poor in certain segments of our population. There's a social cost that many pay in this form of invisible tax. It is time that we use data, networks, and technology to eliminate delays and reduce costs. This time is now. The global widespread use of real-time payment system lends compelling evidence to a discussion that is needed in the U.S. The U.S. Federal Reserve must take this lead in building this vital social commerce infrastructure with a heightened sense of urgency. Thank you again for this opportunity.
Thank you, Mr. Williams. Ms. Benson, you're now recognized for 5 minutes.
Hello, Chairman Lynch, Representative Hill, members of the task force. We are in the midst of a once-in-a-generation shift in how payment systems work. The United States is joining countries around the world in bringing to its people a new class of payment systems. These systems work just the way you'd want them to work, just the way you think they should work. You tell your bank you want to make a payment, the money shows up in the receiver's account. My firm, Glenbrook Partners, is working with the payments industry, both here and around the world, on the introduction of these new systems. Some countries are introducing these systems to improve efficiency and user experience. Others are primarily concerned with financial inclusion, ensuring that underbanked and unbanked people can use financial products. The same real-time payment systems support both goals. Our objective, I believe, is to ensure that these systems are accessible, affordable, and secure. These are universal goals for such systems. But a real-time payment system must also be ubiquitous. That is to say, it must allow someone to pay anyone and be paid by anyone, regardless of where their funds are being held: a credit union, a community bank, a large national bank, or some other licensed financial services provider. This ubiquity is key to the vision put forth by the Faster Payments Task Force. When we look around the world, most countries are meeting this goal by having a single national faster payments platform, which all banks access. With the announcement of FedNow, it is clear that the United States is choosing a different model, with 2 or more providers of real-time payment systems. This mirrors our ACH system, which has 2 operators. To achieve the goal of ubiquity in a multiple network model, these systems must connect. In the terminology of our industry, they must interoperate. That's what our ACH system does. That means that I can send you money even if my bank and your bank are using different systems. The only alternative is to have each financial institution implement every system, a daunting concept. Let me be clear that there is no real technical challenge to interoperability. Rather, it is a question of governance. The various systems should live underneath a common rule set, as is the case with our ACH. A common governance structure would also help to ensure that the industry works together rather than in separate and fractious groups on issues such as transaction security, payments addressing, and the ability to eventually connect to other countries. Payments addressing is important. Today, when you use a debit card or write a check, you are giving your account information to someone who uses that to pull funds out of your account. We all know how that can go wrong. Faster payment systems, in contrast, can be designed so that an alias, a payment address, your mobile phone number, or Carol123, can be used to push money into your account. This address can never be used to pull funds from your account. That is a huge security benefit. The directory of these aliases, which is a critical piece of infrastructure, needs, in my opinion, to be a central utility, not separate directories for every service. Australia has moved in this direction with the establishment of what they call PayID. India is doing the same thing. The industry's establishment of the U.S. Faster Payments Council is a good move in this direction, but the imperative is interoperability. Cooperation without that will be of little utility. Last week, Glenbrook Partners launched an online survey with the Faster Payments Council to gain further insight from the industry on this. Findings of that will be available in November. Other countries are already ahead of us on this journey. We have a large economy and a sophisticated infrastructure. I hope that we can cooperate and connect going forward. Thank you.
I now yield myself 5 minutes for questions. President George, I think everyone was encouraged when we heard that the Fed was going to move to a real-time payment system. I know that the initial announcement, which only came recently, laid out a time frame of perhaps late 2023 or 2024. Is that, can we, with the velocity of change that we see in technology around the globe, can we wait that long? And is that something that, do you think that time frame works, or is there some way we could expedite that?
So we are beginning now the process of getting the input for the design and features of this system, which we think are critical to laying the foundation for that system. It was important to me that we have the dates in the Federal Register notice as a way to set expectations, to talk about what the timeline might be, but I think we are very interested in moving as quickly as possible, and I believe we have the right team to be able to do that. Okay,
now, do we have, obviously, we have outside help, we have contractors involved in that. Anybody, I know that the clearinghouse is already involved in a parallel system. Are we learning from other countries in terms of how they have proceeded? Are we using the best practices that are out there?
Yes, Chairman Lynch. This was a very important part of our effort the last few years through the Faster Payments Task Force, was to bring together a broad range of stakeholders in that payment system that include innovators, the fintech, all the way through the banking system. We look carefully at what other countries were doing to inform the work that we will be undertaking now. So we have looked broadly, and I feel good that those inputs will position us to be able to move forward with a design that we can serve as a foundation to the country for.
Great, thank you. Mr. Sinha, so when the UK adopted their system, at least initially, we did see a spike in fraud, jumped about 132%. Since then, though, it has modulated, it has come down. What were some of the reasons for that, and is there some way we could avoid the same occurrence?
Yes, so I think we can learn a lot from the implementation that was done in the UK around security measures. So over time, the UK system and the banks who give access to customer funds implemented more checks and balances to confirm you are who you say you are. And that means not just having you sign into your online banking account with the username password, because we know customers reuse passwords all over the place, but actually requiring a unique code being sent either to your mobile device or your email to authenticate that you have that device and sanction that payment. So that, I think, reduced fraud a lot. And then from there, they've gone on to put in regulations. We recently came into effect on September 15th, which was called the Secure Customer Authentication Regulation. I think that's a step change, which requires customers to verify themselves before initiating any payments. I think that's a very important part of the implementation in the United States that we can learn from other countries. Instant payments and security go hand in hand, but the security should be moved into verifying the customer before the payment is initiated.
Great, thank you. Mr. Steen, as a community banker, there are some of your colleagues from around the country that are a bit concerned about how competition for customers might occur where you have a traditional banking system with the rule of law and a whole menu of regulation competing with a stripped down, bare bones operation that might not even have a storefront in terms of competing for banking business. Do you feel comfortable that at least with FedNow and that it would help you to compete in that world?
Yes, Chairman, it gives us a chance to be relevant in the payment space. What you described is a battle we're fighting as we speak. A number of non-bank payments systems are being used by my customers. They believe they're real time. They're not, but as long as they have the money when they want it, it seems real time to them. There's credit risk in those circumstances, and I think that we can solve a lot of those problems for our own industry plus our consumers with FedNow.
All right. Very good, thank you. I now yield to my colleague, Mr. Hill, for 5 minutes.
Thank you, Chairman. A great panel, and thank everybody for coming. Mr. Williams, I really enjoyed your discussion about your family cash management issues growing up, and that's so important as a part of this. If we have the privacy, if we have authentication and security, both businesses and families will have more control over that cash management situation at a lower cost ultimately. There are a lot of building blocks to get there, but I thought you made some very good points, and you can envision a world with no accounts payable and no accounts receivable, and that's going to affect bank lending to some degree, but lowering those agency costs for both small business and for families is an ultimate objective of fintech, in my view. I'm interested, Ms. Benson, if you mentioned this famous buzzword of all testimony I read, interoperability, and in the clearinghouse letter that they've submitted here for the record, they really talk specifically about NACHA's rules as being the key to that. So really the definitions of it, and it's not really bound by technology. Do you agree with that assessment? I mean, it's not to say it's not technological, but the interoperability is more about definitions, rules of the road than it is purely a technical issue. How do you feel about that?
Yes, Mr. Hill, I agree that they're separate things. I'm not sure I'd say one is more important than the other. The technical interoperability is relatively simple. Switch kind of mechanism exists in payment systems around the world. Frankly, the rules, the role that NACHA provides of having one rule umbrella over different operators is more challenging to put in place. And where we've seen situations where that doesn't happen, and I would note that the bill payment process in the United States is like that. There's no coordinated way in which that happens.
It just flows haphazardly through the ACH system.
And you look at another country that has put the rules in place for that, and it all works very...
Yeah, thank you for that. President George, the Fed has certainly been for 100 years engaged in the payments process, no doubt, and in all the principal payment arena, both wholesale and retail, the Fed's a player in some way. We've talked about ACH and we've talked about FedWire. But I noticed in a 2015 study that there were recommendations made that both the National Settlement System and FedWire stay open longer and make it more convenient for innovators and for banks, and yet you really haven't done that. And yet we're now looking to you to very quickly, you say in 5 years, I agree with my chairman, that seems like a lifetime in this business, have real-time payments. What is the Fed doing to extend customer service now with the products that you have now in FedWire and the National Settlement System?
So across all of our current payment services, we are focused on improvements that would help with speed and security both across them. In the most recent Federal Register notice, even as we're going out to look for the features of the FedNow system, we have agreed to explore how extending FedWire hours can help facilitate private sector operations in this space.
Yeah, I think that's important, whether you're in Mr. Steen's bank or over in London doing a transaction. I mean, we're the biggest economy in the world, and it seems like we're all bragging that we're all faster and better and going to be wonderful in 5 years when we have fantastic systems now that if you were just open on the weekends and federal holidays, it'd be pretty nice for everybody in my life. And so I encourage you to do that, and I hope you'll make that a priority for the Fed. Mr. Steen, in your testimony on page 3, you talk at length to the Fed having fair, flat prices. But President George, doesn't the Fed, because of the Monetary Control Act, actually required to earn a return on all Fed investments in infrastructure, and therefore you do offer volume discounts and differential pricing for your products, don't you?
With our ACH, the law requires us to recover our cost. And so, yes, we have aligned our pricing relative to market practices. We have made that transparent as a way to not only recover our cost, but to lower the cost overall.
Sure. No, I think it makes sense to me. I'm not complaining about it as someone who looks out around here occasionally for the taxpayers. I think it's a good idea. Would this Fed Now process also be subject to that Monetary Control Act?
Absolutely.
Yeah, good. I think that's good. Well, I just want to make it clear to all of our listeners here that the Fed, too, recaptures its cost of capital and attempts to design systems that compete fairly in the private sector, and that there's not some free lunch in Fed systems compared to a system run by one of the private competitors, whether it be ACH or what I understand is proposed from the clearinghouse to talk about what they're proposing. They're not here today to answer questions about it, so I don't know that I can turn to that. Let me yield back, Chairman, and thank you for the panel.
The gentleman yields. The chair now recognizes the gentleman from Georgia who has been a longtime member with a keen interest in fintech and is a great member of this task force. The gentleman from Georgia, Mrs. Scott, is now recognized for 5 minutes.
Thank you very much, Chairman Lynch. And Chairman, let me also commend you for the outstanding leadership that you are providing on fintechs. As you know, our fintech industry is the new frontier of our great financial services industry. And you're certainly providing great leadership on it. And also, I'm very excited about working with you on our FinTech Act, where we'll be dealing with harmonization of regulatory agencies as well as privacy. I might mention also with Ranking Member French Hill. And so we're all a team ready to go here. And I'm really just proud to be a part of this great team. Very excited about it. Let me just start out by making this very brief statement. The development of our faster payments framework in the United States, it indeed holds incredible potential for our payment system. Advanced technological developments in our payment space readily improves access to funds for consumers and increases the convenience of availability of payment process. And of course, this is very important to my state of Georgia. Georgia leads the nation. We produce and provide 70% of all of the electronic transaction payments. We got great companies down there like TSYS, Cabbage, NCR, and we are very excited about the role we play in the nation. But first, I'd like to discuss the mechanics of any faster payment system. As exciting as this new technological development is, it is also increasingly complex. For example, under the current payments infrastructure, payments can be either initiated by a sender, which is the push payment, or required by the recipient, which is the pull payment. Now, this flexibility also includes certain protections under Reg E to ensure that consumers have some ability to recoup funds that were sent out without their authorization. A real-time payment system, however, is primarily a push payment system, meaning that once I hand over my money, it's going to be very difficult to get it back. Now, this is fine when considering correctly authorized payments, but you all know we live in a world where consumers must constantly be guarding against fraud and against cyber attacks. So, Madam President George, do you see any advantage or disadvantage a real-time payment system may bring with regard to a consumer's ability to recoup funds that were initiated without authorization?
So you've raised a very important question because consumers will be initiating and the payment will go in real time. And this will be an area as we work with the industry on how education will work. Banks work closely with their customers on making sure they understand how their systems work, and I expect that will continue. We, of course, will be working with the industry more generally on other kinds of fraud mitigation standards and things that may help the system as a whole. So I concur with your concern about consumer protection, and we will continue to keep that in the forefront as we do this.
Tell me, Madam President, what about payments that were sent erroneously, perhaps incorrectly spelling the recipient's name, for example?
So we have not designed the features of our system. Banks are dealing with this issue today and are operating within the legal structures to serve their customers, including with their own agreements with those deposit accounts. So I agree with you. It is an important issue, and one, as we provide the foundation here, we'll engage with the industry on.
Well, Mr. Sinha, very quickly, how are consumers and recipients notified of a real-time fraudulent payment? And what is the dispute process like for such a payment?
So, Congressman, there's multiple ways we can notify the consumer. One is when they initiate the payment, they should be authorizing the payment with a separate code that only belongs to them, and that is sent to them real time once for one-time use. Mm-hmm. Second one is in some faster payments networks now, we are seeing the regulation coming in to check for beneficiary name, confirmation of payee to be matching the actual name of the payment recipient with the name of the account. And then I think, as President George said, there's quite a bit of work that still needs to be done in this space, but I think the crucial part is to make sure we give the control to the consumer and make them understand and educate them that they should authorize the payment, and once payments are sent, they're final.
Well, thank you very much, and thank you, Ms. Chairman, for that extra time. Thank you.
Gentleman yields back. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Witnesses, thank you for being here and talking about an incredibly important feature of America's economy. Ms. George, initially the Federal Reserve had signaled to the market that the Fed wasn't going to take this payment system over, as they have in a number of other things. So there was all this investment in R&D in the space. And now the Fed's decided that, we want a do-over and we're going to take it over. So what do you say to them about all the billions of dollars they invested in the space, only to have you guys capitalize on it with somewhat less investment?
So the Federal Reserve has a history of working alongside the private sector. Every payment system we have today, the Fed is involved alongside a private sector operator. Since the start of our work in this area, we have supported the private sector solution. First, by providing an account, a special account at the Fed, where they would be able to set up their particular real-time solution. The next step in that process is for the Board of Governors to determine whether a single private sector operator is able to achieve the public policy goals of having broad access in the United States, of an efficient payment system, and
Why would we want a single operator? Why wouldn't we want multiple operators to be able to use whatever you want to use as a system?
Multiple operators, I think, are desirable, and the competition that comes from having the Fed move into an operator role is one of the objectives.
When you can come in and take over a market, is that partially because you serve as regulator, the dominant, you pay out IOER and all kinds of other things, so if you choose to be in the space, does anyone have a vote? You guys just decide? It's not really optional, is it?
So under the authorities of Congress, we are required to be very transparent.
Well, of course, Congress could tell you you're not going to do it, so that could happen, potentially, but short of that, the market isn't going to tell you you can't do it, right?
Actually, in working with the market through our Faster Payments Task Force, we were looking for the private sector to step up and respond. This is a business of considerable scale and network effects.
Of course. Well, it's a big deal why the Fed takes it over and continues to serve as regulator. One of the criteria that the Fed has to meet is to recover their cost in the long run. During your testimony yesterday at the Senate banking hearing, you stated that the Fed has historically done this, and you expect it to continue to be the case under the Fed Now proposal. by historically done this, I assume that you mean such as, FedWire and Fed's automated clearing services, correct?
Yes, sir.
So, and these fees associated with these services, are they based on volume, or do you have effectively high volume discounts where you pay a lower price if you deliver a lot of volume and a higher price if you have less volume?
So we publish our pricing schedules each year so that customers can see, and those prices are set to allow us to recover fully our cost.
But they are based, there is a different schedule based on your volume, correct?
Those are priced, there's fee structures per item charges, there may be volumes, discounts involved in that.
Right, but so fundamentally, JP Morgan Chase is paying lower per transaction than, say, Osgood Bank in Osgood, Ohio.
Actually, our smallest banks are benefiting from the volumes that come through the Federal Reserve.
Because they couldn't set it up on their own, I got it. So why does the Fed charge I guess, in the assumption that you make that the Fed now takeover of the private capital invested here, do you assume that you pay for that based off being able to do volume discounts?
We have not set our pricing yet, but as soon as...
Well, you haven't set
we
the pricing,
design-
but you had to model it, right? I mean, you're saying it's going to break even. Is that just you're hoping it's going to break even, or you're confident that you can charge whatever you want because the market doesn't really have a vote in it?
No, sir, our pricing requires us to recover our costs, which means we have to compete with the private sector to do so. And so in a FedNow service, we will be required to demonstrate what those costs will be, and as soon as the system is designed, before it is launched, the Board of Governors will go out with public comments showing that.
So in the dialogue, I'd like to associate myself with Mr. Quarles' public remarks in your hearing, which is skeptical. You're crowding out private investment. In the meantime, frankly, the fact that you can't launch this anytime soon, you're killing market. And when you talk about people being able to pay right now, Uber's paying their drivers up to 5 times a day in the current payment system. So this, to me, seems like a step back, and it is crowding out in a monopolistic way private capital that's already been invested. So I wish I had more time to get to Mr. Williams, and hopefully you come back to Cincinnati. Love to see you there. Come back home from LA, and just great to see a local company doing well. So thanks for that. I yield.
Gentleman yields. The chair now recognizes the gentleman from Florida, Mr. Lawson, for 5 minutes.
Thank you, Mr. Chairman. Welcome to the committee. And I'm trying to understand the consumer aspect of that. There are many issues that are important in the payment space, but I would like to focus in on the consumer aspect. Can you all speak to what challenges you've seen in the payment space with regards to access to immediate funds by those who are underbanked or those in emergency situation? Harvard University said that they were doing a 6-week course on how to use fintechs. What happens if there's no money? How does this affect the consumer when they're trying to go through, when things are recorded in the account at a later date? What do you do? What do they do? Anyone can respond to that?
So I'll start by saying the Federal Reserve has looked carefully at the issues affecting the underbanked and unbanked in this country, and through some of our community development work have raised these issues. In the case of real-time payments, we see that having the ability to manage your money more directly is a benefit that will benefit the country. Economically, it certainly benefits individuals in being able to have the flexibility to control their finances. So we see it as a positive move forward for those individuals that most need this kind of finance flexibility.
Go ahead.
Congressman, so I think one of the big things that we see with slower payment systems and when things are delayed is people who are underbanked, they have the biggest impact around access to funds. And they end up going to more expensive options like check cashing or having to go into overdraft, which are very high cost services. I think having real-time payments where you know when your payroll is going to hit your account, and then you can set up that if your payroll hits on Friday morning, you know it's going to come Friday afternoon, you pay your bills, and you know it's going to go shipped so that it'll be there and hit the utility bill so that the electricity is not turned off on the weekend. I think that's imperative. That is very, very important to remove that doubt of whether my money will make it from one place to the other. So I think that's a very big advantage for real-time payments.
Was it Steele? Stern?
I would use a couple of examples. In our case, we're a small bank. We're working with several different fintechs, trying to deliver payments faster. We're still dealing with the current infrastructure. So in the example of the Uber drivers able to get their payment 5 times a day, they actually pay for each one of those, and the employer is actually providing them availability of funds they don't yet have. And so hopefully with an immediate settlement, they could bring that cost down for those Uber drivers. That would be one example.
Ms. Williams?
One example, Congressman, is a company called Solo Funds, which I'm a co-founder. The premise of it was to actually provide cash in real time to individuals in need. And in building that product, we had to work around and through so many different infrastructure challenges. But what I would say, what we have allowed is individuals to actually lend to other individuals in real time. And the individuals actually receive the benefit of providing that capital while the person in need gets the capital immediately. That's called Solo Funds, but that's how we're addressing that issue.
Okay, Ms. Benson?
I'd like to address 2 parts of this and say that in emerging economies in Asia and Africa, there's overwhelming evidence that the availability of real-time mobile payments is bringing people into the formal financial ecosystem. They're opening bank accounts and other forms of transaction accounts and are able to participate in digital commerce and things like that as a result. So that's a good thing. I'd also say that although I think these faster payments are immune to certain types of fraud that exist, say, in our card payment systems, there are other kinds of frauds that will rear their head. And again, I'd like just to emphasize how important it is that we take a collective view on managing these frauds and not have every little system and company doing it separately.
Okay, my time has run out, Mr. Chairman. I yield back.
The gentleman yields. The chair now recognizes the gentleman from Wisconsin, Mr. Steele, for 5 minutes.
Thank you very much. I appreciate that. President George, we've had a lot of conversation today about the pricing. I know you did yesterday, in particular, Senator Toomey asking you on some of that. So I want to park that conversation a little bit because I think we've heard kind of the broad picture of how you're looking at it. I want to dive in, if I can, Mr. Steen, and get the perspective of local banks, your bank in particular, or other community banks, what the impact of that pricing would be if the Fed deviated away from a flat fee structure.
Well, we are not in a flat fee structure. And so, for example, our bank was very early in check imaging. And as soon as we started implementing that, our costs of check clearing went down 60%.
When you implemented what?
Check imaging.
Okay.
Check 21 Act. We were very early. And so our costs for Check 21 or check clearing went down 60%. Our ACH transaction is, it's true, others probably get it less than we do, but it's a quarter of a cent, and I can manage that. So I think they bring my costs down as much as they can, and we see through, with technology advances, I'm good with the pricing structure that I'm living with.
And where you're good is, do you see that also with your colleagues across community banks, comfort with the Fed's pricing structure? Do you see, is that a bit of a dialogue? Can you provide flavor to that?
Well, many of my peers deal indirectly with the Fed through bankers' banks and corporate credit unions, but everybody's working off the same base pricing. And so I don't hear a lot of criticism or complaining about the pricing structure of payments in the rails that we work with, that being Check 21 and ACH. Wire, they brought the price of a wire down since we can connect directly to Fedline Advantage. But internally, would be just from security purposes. I mean, in our small bank, we have 3 people involved in every wire, so there's some internal costs. But the cost that the Fed is charging me for a wire is the least of my concern.
Thank you. Thank you. I appreciate your insight. Shift gears a little bit, but go back to you, President George. We've discussed a lot of the international comparisons in the real-time network, an area I'm assuming you spent some time in looking at. Are there examples of government-run systems operating with parallel to the private sector that you've seen internationally? And if so, are they interoperable?
So as Ms. Benson noted earlier, many of these countries operate with a single provider. It has long been the case in the U.S. that for competition and safety and accessibility, we have had dual operators to achieve the outcomes we want for the public. The ECB is a system that is dealing with multiple providers, and we have looked closely at how they have developed their real-time payment system and talked about interoperability.
Thank you very much. I appreciate you all being here today. I yield back.
The gentleman yields back. The chair now recognizes the gentlewoman from Iowa, Ms. Axney, for 5 minutes.
Thank you, Chairman, and thank you to the witnesses for being here. Mr. Steen, always good to see you. Thank you so much for being here from Iowa today. I'd like to ask you a question about, what do you think are some examples of how Iowans back home could benefit from a real-time payment system?
Well, I think the people, our customers, many of whom are making what they believe are real-time payments. I addressed that a little earlier, but I think that the idea of being able to pay somebody in real time, particularly in a late payment or a late immediate payment circumstance, is really key. And that happens all the time. People forget things. And we've seen from experience the value of same-day ACH and missed payroll files. It was a nightmare if missed payroll file prior to same-day ACH. Today we may not get it as early in the day as they're used to, but we can get them paid. And it's a huge advance in payments.
Absolutely, thank you. We want to make sure that we pay people as expeditiously as possible. You know, what you just mentioned, those situations are why I was happy to co-sponsor Rep. Presley's Payments Modernization Act, and I want to thank her for her leadership on this issue. An updated version of the bill, which we're considering today, would require the Fed to complete that system within 3 years and would require banks to make deposits available more quickly. I did hear some feedback that the limited hours for the National Settlement Service and the FedWire could cause some problems with doing this. Ms. George, I know the Fed is considering extending those hours. Is that something that could be done faster than the currently proposed 4-year timeline for FedNow?
So our commitment to explore this issue will be handled separately from the time frame that we've designated to build a FedNow service. The issue about extending our funds transfer system is one that will require the board to do some analysis, because this is a system whose operational characteristics will require us to engage with the industry to understand what the implications are. But the Federal Register notice that we issued last month does indicate in there that the board will explore extending those hours.
Thank you. I've spoken to Representative Presley, and we've agreed that expanding NSS and FedWire hours will also be included in the bill. So thank you for your work on that. I want to change topics here a little bit. As I understand it, there's some question as if FedNow is going to be interoperable with the clearinghouse's system or others. We've been talking about that throughout the day. Considering that the system hasn't even been built yet, claims that these systems can't fully work together to me seems very premature. My husband and I own and run a digital design firm. We deal with the clearinghouse. We deal with wire payments from internationally. We are very familiar with setting up payment systems for our customers. So this is not something that I'm never used. I'm familiar with this to some degree. And I certainly recognize the challenge of getting different systems to work. We deal with that all the time. But solutions, quite honestly, can almost be found almost all the time. And so I really think that that shouldn't be anything that should be considered to be an obstacle in this. Mr. Steen, we know that Iowa has far more small banks than most other states per capita, and that those community banks, in many cases, are the only bank in our rural community. Can you explain for us how important it is for smaller banks like yours that those systems be operable? You touched on, a little bit on it earlier, but especially I'd like to hear about the terms of reduced cost in connecting to all of these systems.
Well, the connecting systems is always the friction, but I would tell you that it's essential that if we're going to have a legitimate real-time system, real-time payment system in the United States that extends beyond our borders, that we simply have to be interoperable with each other. It's challenging because our friends at the Clearinghouse has said that theirs is not interoperable, and it's going to be very difficult for them. But one of the key desired outcomes of the 2015 study was collaboration. We went through that 4-year task force, and it turns out that there was an interoperable system being built.
Do you think if we're not able to make this interoperable, it's really going to limit your ability to provide good services for your customers moving forward?
That would be very difficult, but I am operating under the belief that the market will force interoperability.
All right, thank you so much. I yield back the rest of my second.
The gentleman yields back. The chair now recognizes the gentleman from Virginia, Mr. Riggleman, for 5 minutes.
Thank you, Mr. Chairman, for calling this hearing today and for allowing me to participate. I appreciate it and thank all of you for being here today. While I am appreciative that you allowed me to join this hearing with this esteemed panel, I just heard some things. I have one little gripe. I could not help but notice we do not have a representative from the Clearinghouse Association here today, the only institution that has successfully developed a real-time payment system in the U.S., and I wanted to ask them some questions. Since they are unable to answer questions or provide input today, I would like, as unanimous consent, to submit into record a statement from TCH.
Without objection.
Thank you. Mr. Chairman, I also saw the legislation that was noticed with this hearing as Congresswoman Presley's Payments Modernization Act. I also have introduced legislation on this issue, H.R. 3928, the Federal Reserve Accountability and Justification Act. So my questions will focus on these pieces of legislation as well as some other topics. I do wish we had more people here. My background was interoperability with massive data sets, data sources, and also governance. So I'm excited to have some questions here today. So President George, if Congress passed the Payments Modernization Act and the President signed it into law, how would the Federal Reserve accomplish real-time settlement today as that legislation requires?
So we are proceeding today under the authorities that we have under the Federal Reserve Act to begin to design a system that will deliver real-time payments as another provider here in the United States.
Thank you, ma'am. And given that the board recently announced its FedNow system would not be operational until 2023 at the earliest, I could take that as an indicator that the Payment Modernization Act could be a complete disaster for the United States payment system based on the amount of time and cost. Ms. Benson, based on what we learned from yesterday's Senate banking hearing as well as the information in the board's August proposal, not only has the Fed not determined how their system will be interoperable with the private sector, but apparently there isn't even an agreed upon definition of what interoperability is. When Chair Powell was testifying before this committee in July, I asked him about interoperability and he admitted it was a complex and currently unsolved issue. Your testimony addresses this topic and said that interoperability is not a technical issue, but one of governance. Given that the Fed has not yet defined interoperability, what steps should they take to address this?
That is a good question. I think that it is a matter of working with the clearinghouse, and I'd also like to acknowledge what Mr. Hill said earlier, that there are other networks like Visa and MasterCard who have real-time payment systems in place today. And how we get to the place of having a governance umbrella over these systems, I don't know exactly what the path to that is, but I think we did do that with the ACH, and with the right will, we should be able to accomplish it.
So, and what I was interested about when you talked about governance, as you know, sometimes governance determines the exact data element needs based on what the releasability of that data is, or who can see that data, or even how you target or track the data elements in that specific data. That's why I was so interested about it. But if it is about just governance, which I hope it is, and President George, if the issue of interoperability is simply a governance issue, why did the Fed not address it prior to the August notice?
As part of our work with the Faster Payments Task Force, that group did conclude that governance would be important and put together a Faster Payments Council. It is just coming together, and we are watching that carefully to see whether that will be an effective way to go about the governance process here.
And the reason I'm asking this, and I think some people might be curious about, the governance also determines cost. You know, when I was looking at TCH and looking at what they talked about costs, they're talking about close to $1 billion. I know that governance and the complexity of that governance could actually affect the cost based on data, specifically in the sharing and the interoperability of that data. So that's why I'm asking some of these questions. And Mr. Steen, my district is very rural, and the financial institutions that serve many of your constituents are small banks and credit unions. I agree with your sentiment of your testimony that institutions such as yours provides a very critical service to the economy, and payments are a vital component to that. When I talk with my bankers, their number one concern on this topic is not who offers the faster payment service, but that they're getting a fair deal. My legislation would simply codify the Fed's own policy statement into a formal rulemaking so that Congress and small banks are giving absolute clarity regarding cost recovery, which is related to pricing. The TCH is committed to a flat fee structure, whereas the Fed has not. And the Fed has also announced that cost recovery will likely take longer than 10 years. As you support the Fed's decision, would you also support transparency, especially on pricing and cost recovery? And are you prepared to wait what could be 5 to 10 years for the FedNow system to become operational?
My role in the Faster Payment Task Force from the beginning, the steering committee, et cetera, I've been pounding the table as much as I can for the Fed to move faster. So we all agree on that. I think that the pricing is transparent. I think they give us a pricing list. We get to make our decisions. But it's never fast enough, and I remind them I'm old, and I want to see this happen, so we got to keep moving. But I am very confident that they can move this forward on a timeline, and governance evolves. So I don't know that we will know exactly every rule we need when we start, and I would just suggest that we need to launch this. We have an industry that can work together when we have to, and we will do that.
Sir, I thank you kindly. Thank you all kindly, and I yield the balance of my time.
The gentleman yields. I would thank the gentleman from Virginia for his remarks, and I did hear yesterday that the minority wanted to ask the clearinghouse to come on in. If I had known in advance, the minority did have an opportunity to pick them as their witness. I think they would be a wonderful witness. I think you also chose wisely, though, in Ms. Benson and having her as the minority witness, but I would certainly leave it wide open to having the clearinghouse in at a later time.
Ms. Benson's very capable and intelligent. Thank you, sir. I wasn't blaming you, I promise.
Okay, all right, thank you. The chair now recognizes my colleague, the gentlelady from Massachusetts, Ms. Presley, for 5 minutes.
Thank you, Chairman Lynch. I appreciate the opportunity to be waived on to the task force today to participate in this hearing, especially given the issue. Working families should not have to wait days at a time just to access their own hard-earned money. As I said to Chairman Powell a few months ago, when you were living paycheck to paycheck and rent is due the first of the month, there can be no room for error. After the Federal Reserve's August announcement, this is no longer a question of if, but when, and how this faster payment system will develop. Unfortunately, the longer it takes to build this system, the more families and small businesses will suffer. That is why I was proud to introduce the Payments Modernization Act in partnership with Representative Chuy Garcia and Senators Warren and Van Hollen. This is the only legislation that holds the Fed accountable for developing a faster payment system that prioritizes consumer protection, fraud prevention, and equal access in a more reasonable time frame. My bill requires the Fed build this system in 3 years, allowing the U.S. to remain competitive and to not fall further behind in the global payment space. There is still more work necessary to ensure a smooth payments modernization process. That is why my bill requires a GAO study on the U.S. payment system and what regulatory and legislative changes are necessary in order to promote consumer protection, reduce fraud, and to promote stronger cybersecurity practices. Now, there are some who believe that this pressing need can somehow be met by the private sector alone. However, the existence of both ACH and the clearinghouse's private settlement service suggests otherwise. I want to ask each of you a simple yes or no question. Can the clearinghouse alone reach all of the nation's almost 11,000 financial institutions? We can just start with President George and go all the way down the line.
The board's analysis concluded that they'd have significant challenges in doing so.
Yes or no?
No.
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 Not in the time frame you're indicating, no.
So it's clear that the current system is insufficient. Small and local banks and small businesses alike do stand to benefit from this proposal. Mr. Steen, how does your bank plan to use real-time payments? And how will this benefit your customers, particularly small businesses and low-income people?
We are currently working with some partners, otherwise known as fintechs, that targeting underbanked, underserved customers. We structured a virtual branch. We're creating bank accounts for these folks. There's a debit card associated with it. And we believe that we can bring these folks into the system. And we are working with a group targeting Latino churches and a Latino Church Association. But even in our core customer base, which is a rural community, and we know most of our customers, virtually all of our customers, we know they have needs, and many of them live paycheck to paycheck. And we've improved things, you know, with online banking. They can see their account much more readily. We know from our own experience that overdraft volume is going down significantly year over year. We think that's a good thing. We're not trying to make money on overdraft fees. Our overdraft fees are low. We don't charge relatively low. We don't charge on continual fees. We cap overdraft fees. So we do everything we can because we know how much of an impact that makes.
Thank you, Mr. Steen. And Mr. Williams, how will the added transparency and quicker access to funds protect working people from otherwise predatory products, such as payday loans or punitive measures like overdraft fees?
I think when there's a need for capital and it's a gap between what a family or someone needs today versus next week, there also needs to be safe resources for that capital. But I think that's one part of it. I think the other part of it is that if there is transparency and when funds will be readily available, families and this group of Americans will have a better chance at planning properly. What's causing the biggest concern is the emergency. It's the things that were unplanned.
Thank you, Mr. Williams. Mr. Chair, I ask for unanimous consent to submit to the record a letter of support for our legislation from the Main Street Alliance, a leading voice for small businesses. And I just want to thank Representatives Axney, Tlaib, and Chairman Meeks for their support of this effort. And I urge the remainder of my colleagues to do the same. Thank you, and I yield.
The gentlelady yields, and those documents are accepted without objection. The chair now recognizes the gentleman from New Jersey, Mr. Gottheimer, for, well, nope. All right. Well, with no further witnesses, I'd like to thank our witnesses for their testimony today. Without objection, the following letters will be submitted for the record. Letters from Consumer Reports, letter from the American Bankers Association, Americans for Financial Reform, Financial Innovation Now, the Food Marketing Institute, NACHA, which is the National Automatic Clearinghouse Association, the National Association of Federal Credit Unions, and the Retailers Leaders Industry Association. And without further objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. And I ask that the witnesses, if you receive any questions, to please respond as promptly as you are able. So without further objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for the inclusion in this record. This hearing is now adjourned. Thank you.